Are market prices going up or down, and by how much?
It varies by markets. I think we have every primary, secondary, and even tertiary market represented within our community. And if you're in markets like Phoenix, you have seen 30% change, as much as 30% change in some of these markets like that. Salt Lake City, a lot of the mountain region has just been crushed. Phoenix, Salt Lake, Boise, Reno, Spokane, Washington. I had some conversations the last few days, and those prices have obviously come down. Boise had a 125% increase over the last few years, so there's still room for those prices to come down. And I'm in the third. In the United States, Tampa is number 3, and when it comes to people moving here. And I'm seeing price reductions left and right in this marketplace. So I do not think that we've hit bottom, but also in my Midwest market, I've only seen a 10% change. So again, this varies by market, but if I'm a betting man, price is going to continue to go down.
Okay, CJ, your thoughts?
I agree with Leon. I mean, right now you've got to really dial into your market. It's very market specific. Like I said, I'm in Richmond, Virginia. We're seeing the market hold pretty strong right now. But when I take a look at other markets where we wholesale at aggressively, I mean, we're seeing tons and tons of change in these larger markets, the Atlantas, the Tampas, the Phoenixes. We're seeing great change in those markets. The markets that I really like right now, the market is very similar to Richmond. These mid-sized cities, the Memphis, Tennessees, the Chattanoogas, the, Birmingham, Alabama, Tuscaloosa, these different places are really still holding strong. So I think you have to be more dialed in with analyzing your market and knowing where you're doing business, and then not being afraid to pivot from a market and move into another territory and do business virtually and take advantage of those opportunities as well in stronger markets.
Okay, let's go over to Eric Brewer.
Yeah, I mean, I think certainly it's just a math equation. You can't continue to have rates go up and prices not come down. It cannot happen. I think the real question is, will we see the rate of appreciation become more sustainable and even over time? And that certainly will come back down to a normal amount. I mean, no one could have ever believed that what we were seeing 25, 30% increase year over year was ever sustainable. It's just going to flatten out right. But I don't see with the demand how prices can, we're not going to see a bottom. We're not going to see a crash. We're just going to see a correction. And that feels more like a crash in places like Phoenix and Salt Lake, because they saw double the amount of appreciation that even the second craziest market saw. So there just had to be a bigger correction there than what we'll see anywhere else. So yeah, prices are going to come down, but it's not going to crash like everybody's speculating.
All right, and Boss Man, bring us home.
So I'm going to try to actually answer the question. I do believe that prices are going to go down, and as far as by how much, I would speculate probably another 1-2% a month for the next few months. It's going to be really interesting to see what happens next year. But we had Tina Tambor here yesterday, and she made a great point. I thought that really interest rates going up any higher really can't hurt us anymore. We kind of found as far as we can go, going from 7% to 8%, 9%. If you're going to buy a 7, 9% might not scare you, right? But if 7% scares you, 9% definitely scares you. So we've eliminated most of the buyers that are not going to buy. So I think that the demand, although low, a lot of people that have the homes that don't need to sell, they're just going to stay where they're at. We've kind of talked about that last week. If you don't need to sell, why would you sell in this market? Why would you subject yourself to this abuse? So I do think it's going to continue to go down 1 or 2% per month for the next few months, but I think probably we're going to be even in 2023.
Okay, the floor is
I
open.
tell you one place where that percentage from 7 to 9 does make a difference, Steve, and that's, we talked about the market in general, where people not wanting to sell, but if there's buy downs of 1, 2, and 3, like I had a conversation yesterday with a flipper in New York, and he's working with a mortgage broker right now that's allowing him to buy down the buyer's interest rate all the way down to 4%. You'd buy at 4%. That would make sense for you to sell your home if you could buy at 4%. It's not 2 like it was 9 months ago. It's not 3. But at 4, that's a really good number. You start getting into 9s, and you can only buy down to 5 or 6, right? That keeps you still on the sidelines from selling. So there's a little bit of a difference there where, like I said before with the Fed, keep banging us over the head with this, it doesn't allow to at least, like Eric said, it not necessarily crash, but it doesn't allow us some ability to move on the retail side.
I think there's also like a lot of panic, in our market, because a lot of us haven't really been in the industry that long. Remember, like, I started on the realtor side, and so like if I sold your house in the first weekend 5-6 years ago, what was your reaction? You clearly priced it too low. You gave my house away. Now I don't sell your house in the first weekend. What the hell are you doing, Steve? Why aren't you working harder? Right? So like I think a lot of us are conditioned the last 2-3 years that they don't know what a normal market feels like. And at least for us in our Phoenix market, it is mostly normal, but everyone's acting like the sky is falling.
Yeah, getting 20 cash offers is not normal. And we've seen that over the last 3 years. That's not a normal market.
Yeah, I agree with all those statements, man. I think Eric made a really good point. What we're really truly seeing is appreciation over the last, really 2 to 3 years essentially reset itself. So if the market appreciated 140% in Phoenix, and it's going to take a more drastic hit that it's going to take in Pittsburgh, Pennsylvania. It's just how the math functions out. And so we're just seeing that. One thing that I'm even doing in a lot of our deals is I'm going back and taking a look at what were things trading for in that market or that neighborhood in 2018, 2019. What kind of insights can we get from taking a look at that? And how can we kind of hedge our risk by taking a look at what the value of properties were at that time, and almost asking ourselves, will the deal pencil out if we purchased it and had to sell it at the numbers that the properties were selling in the neighborhood in 2018, 2019. It doesn't work on every deal because of the appreciation, but definitely something that we're practicing that's been helping out quite a bit.
And that was great info right there. Definitely good round all around. CJ is in a slight lead over Steve at 38%. So we will leave the voting open for just another minute. In the meantime, while that closes up, I do want to remind everyone to subscribe to this channel, subscribe to the Part of the Disruption official clips and highlights channel. Definitely check out each of these gentlemen individually. Follow their socials. We're here every Thursday at 11:30 a.m.-ish, providing free game. You can't beat free game. It looks like, Steve, I tried to buy you as much time as possible, but you're just not closing that 12% gap, sir.
I'm not. I think we got to go check the ballot boxes.
Hey, can I add something here?
Absolutely.
Real quick. See, this is for you, actually. There was something that you said in there that there's a reason there's a little bit of a percentage there over Steve. And I think this was not something that the listeners should just throw away. You said for those that are virtual, you're doing research of what things have sold for in 18 and 19. And more importantly, looking into those tertiary markets where they haven't been affected as much. If you run a virtual model and you are in Phoenix, it may behoove you, even though we always talk about laser focus. Well, if you're already virtual, you might as well look at a market that hasn't been affected the same. There's a nice little nugget in there that CJ gave you that I didn't want us just to throw away.
Definitely.
No, I appreciate that, man.
Points for everybody. But those points are unofficial because there's only one person who gets a point, and that is based on the audience. And CJ, it looks like you took another one, man.
No doubt, no doubt. But I really want people to realize what Leon pointed out that I was saying, because I just see people so afraid to pivot, man. Like, I talked to so many people new to wholesaling, and for whatever reason, like, this thought process of having to do business where you live at is almost completely insane. It's so easy to virtually do business. Virtual wholesaling, like I've said on this show before, is literally a marketing term created to sell courses numbers of years ago. Wholesaling is simply wholesaling. And you can literally set up very simple virtual operations where you can do these, types of deals, man, and impact yourself and your business by going into these markets.
Good point.
I just want to point out I lost when I was the only one that actually answered the question, but I'm not bitter.
Talk to the audience, Steve. Speak to the audience.